Hi everyone, what if I told you that 7 simple ETFs could replace your financial advisor and make you more money with less risk? While everyone debates individual stocks, smart money is quietly building wealth with a strategy so simple it takes 5 minutes to set up. Yet so powerful that it's generated over $400 billion in investor money in 2025 alone. Here's what shocked me when I analyzed the latest September 2025 data. These 7 ETFs are paying monthly income up to 10.90% while still growing your money. Some returned over 19% in the past year, and they cost less than a Netflix subscription to own. The crazy part? JEPI is paying 8.42% yearly in monthly checks while giving you 25% less risk than owning stocks directly. JEPQ delivered 10.90% yield from the same tech stocks you love: Apple, Microsoft, NVIDIA, but with monthly paychecks. VTI gained 19.46% over 12 months while costing only 0.03% in fees. Here's what Wall Street doesn't want you to discover. You don't need to pick stocks, you don't need expensive advisors, you just need these 7 ETFs working together like a money-making machine. The big problems everyone faces. Problem number 1, I don't know where to start, there are too many choices. This paralyzes more people than market crashes. The solution is simpler than you think. Start with the Big 3 foundation. 50% VTI owns the entire US stock market, 0.03% fee. 30% SCHD, quality dividend companies, 3.68% yield. 20% JEPQ, tech growth from Apple, Microsoft, and Google. This gives you everything: safety, growth, and income in one simple package. Problem number 2, I need income now but don't want to sacrifice growth. Most people think it's either income or growth. Modern ETFs prove this wrong. Monthly payment solution: JEPI pays 8.42% yearly in monthly checks. JEPQ pays 10.90% yearly from tech stocks monthly. Both still let your money grow while paying you. Problem number 3, high yields seem too risky. What's the catch? Here's where 2025 changes everything. These aren't your grandfather's dividend stocks. Smart risk management: JEPI has 25% less volatility than the S&P 500. SPYI maintains notable outperformance within its covered call ETF peer group during 2025's enhanced volatility. These funds use professional option strategies, not risky bonds. Why these 7 ETFs are game changers? Let me destroy the myths with September 2025 facts. VTI, Vanguard Total Stock Market, 19.46% return over the past 12 months, 10.77% return just this year, owns 4,000 plus US companies for instant diversification, costs only 0.03%, that's $3 yearly per $10,000. SCHD, Schwab US Dividend Equity, 3.68% dividend yield from quality companies, 12.21% average returns over 10 years, only invest in companies that grew dividends for 10 plus years. 0.06% fee, ultra low cost. JEPI, JP Morgan Equity Premium Income, 8.42% yield paid monthly. Over $40 billion in assets. Institutions love it. 25% less volatility than S&P 500. Uses smart option strategies for steady income. JEPQ, JP Morgan Nasdaq Equity Premium Income, 10.90% yield paid monthly, tracks Apple, Microsoft, NVIDIA, and Google, $16.5 billion in assets and growing fast. Perfect blend of tech growth and monthly income. JEPQ, Invesco Nasdaq 100, tracks the top 100 tech companies, massive long-term growth potential, includes all the Magnificent 7 stocks, essential for any growth portfolio. SPYI, NEOS S&P 500 High Income, 12.15% distribution rate as of June 2025. Notable outperformance within covered call ETF peer group in 2025's enhanced volatility. $1.77 billion in flows year to date as of July 2025. Tax-efficient monthly income from S&P 500. VYM, Vanguard High Dividend Yield, focuses on highest quality dividend companies. Broad diversification across all sectors. Low-cost Vanguard efficiency, reliable income foundation. The 4 simple strategies that actually work. Strategy 1, the beginner wealth builder. 40% VTI, total market foundation. 30% SCHD, reliable quarterly dividends, 20% JEPI, monthly income boost, 10% QQQ, tech growth. Expected result, 6 to 8% yearly income plus solid growth. Risk level, low to medium, perfect for new investors wanting simple and safe. Strategy number 2, the monthly income machine. 35% JEPI, 8.42% monthly payments, 35% JEPQ, 10.90% tech income monthly, 30% SCHD, that's 3.68% quarterly stability. Expected result, $650 to $900 monthly income per $100,000 invested. Risk level, medium, perfect for people needing regular cash flow. Strategy number 3, the growth and income balanced. 30% VTI, market foundation, 30% QQQ, tech growth, 25% JEPQ, tech income, 15% SCHD, dividend stability. Expected result, high growth potential with steady income. Risk level, medium to high, perfect for long-term wealth builders under 50. Strategy number 4, the maximum income focus. 25% SPYI, 12.15% S&P 500 income, 25% JEPQ, 10.90% tech income, 25% JEPI, 8.42% balanced income, 25% VYM, dividend quality. Expected result, $950 to $1,300 monthly per $100,000. Risk level is medium. It's perfect for retirees or pre-retirees. The simple math that changes everything. Here's what really opened my eyes about these strategies. Cost advantage. Traditional financial advisors charge 1% plus yearly. These ETFs average 0.2% on $100,000. That saves you $800 annually. Over 30 years, that's an extra $400,000 plus in your pocket. Professional management. Each ETF has expert teams managing billions. You get institutional level strategies for the cost of a coffee subscription. Monthly income. Instead of waiting for quarterly dividends, you get paid every month. Monthly income ETFs attracted significant flows in 2025 as investors discovered this advantage. Tax efficiency. SPYI uses index options taxed favorably as Section 1256 contracts 60% long-term, 40% short-term, regardless of holding period. How to start this week, step by step. Week 1, pick your strategy based on age and goals. Under 40, try strategy 3. Over 55, consider strategy 4. Week 2, open a brokerage account. Fidelity, Schwab, Vanguard all work. Most have zero commissions on ETF trades. Week 3, buy your largest position first. If using strategy 1, start with VTI since it's 40% of the portfolio. Week 4, add the other ETFs gradually. Set up automatic dividend reinvestment for faster compounding. Monthly, add money consistently if possible. Check quarterly to rebalance if allocations drift more than 5%. Why this strategy will dominate the next decade? The data from 2025 proves these strategies work. Active ETFs now outnumber indexed ones, with nearly 90% of 2025 launches being active. Options income ETFs captured $43 billion in inflows in the first half of 2025, a 175% year-over-year increase. Monthly income is exploding in popularity. NEOS options income ETFs accumulated over $10 billion in assets in just 3 years. Monthly dividend ETFs are becoming essential for retirement income. The institutional money is flowing in. SPYI netted $1.77 billion in flows year-to-date. As of July 2025, when institutions move this much money, individual investors should pay attention. The bottom line, these 7 ETFs will likely outperform 90% of financial advisors over the next 10 years while costing 10 times less. The proof is everywhere. JEPQ's 10.90% monthly income beats most savings accounts by 10 times. VTI's 19.46% annual return proves passive investing works. JEPI's 8.42% yield with lower risk shows you can have income and safety. The choice is simple: keep paying high fees for average results or use these institutional quality strategies for almost nothing. The over $400 billion flowing into these ETFs in 2025 proves smart money has already decided. Your financial future depends on when you join them. The revolution in ETF investing has already begun. 2025 is tracking nearly 4 times higher launch rates than the 15-year average. Derivative income ETFs have seen over $80 billion flows in recent years. Will you implement these strategies before they become mainstream or discover them after everyone else drives up the prices? This is educational information only. All investing involves risk, including potential loss of principal. Past performance doesn't guarantee future results. Consider consulting a qualified financial advisor about your specific situation before making investment decisions. Please like, share, and subscribe for more simple wealth building strategies that actually work. Here's to your investing success, profitable investing.